Hey guys, welcome back to the channel. In today's video, I just want to do an end of week portfolio review and kind of give you guys kind of my thoughts and some of the lessons I've learned along the way, because Friday was very, very bloody, right? There was a huge sell-off in the market, and it has a lot of investors spooked right now, right? Including myself. I mean, I'm a little spooked. What you are watching right here, right now, is what happened here in Bangkok, all right? I live just outside of Bangkok, not too far, and yesterday I got to experience one hell of a ride. But I will be talking about this a little later, but I wanted to upfront this point and just say thank you to everyone in my own YouTube community who's reached out to me either through YouTube or on Instagram or even Discord, and just, you know, checked in on me and made sure I was good. It really, really means a whole lot to me that people I've probably never even met before are actually reaching out to me and you know, making sure I was safe. Thankfully, I'm fine. I'm safe, of course. There was no damage to the condo I lived at. But I'll be covering some of the stuff that did happen here in Thailand, unfortunately, at the end of this video. All right. So again, just my heartfelt thank you and appreciation to each and every one of you who did reach out to me. It was quite scary when this whole thing was going down. So anyways, we'll start with the portfolio update. All right. Or the portfolio tracker, I suppose, the dividend tracker. And essentially, this hasn't updated yet, but I did the quick math and figured out that I'm down about $40,000, right? So out of $572,000 between both my portfolios, I'm actually down roughly $40,000. Now, that is really, really scary, right? That is really, really scary, especially for it to happen seemingly overnight, right? Just it scares you enough, especially when you have margin and when you're using margin. But I want to go over again some of the thoughts that I have about all of this, and hopefully it'll help you continue your investment journey. Okay, because yes, in the short term it will be volatile. Yes, there will be pain, but there will be long-term gain. All right, as long as we continue to remember this, as long as we remember that mantra, you know, it will play out in the future. There's several platitudes out there, I suppose, or sayings out there, or adages out there. You know, don't time the market, it's time in the market. That's a really popular one. Another popular one is, you know, when there's blood in the streets, buy, even if it's your own, right? So let me just go through this real quick. Here's my portfolio on M1 Finance. This is where I keep a core of my holdings at. So I have my REIT portfolio here, and it's been doing really well, right? Surprisingly, despite all the market volatility. And I think it's because investors are flocking out of, you know, equities, out of, you know, higher risk stocks, and they're moving to defensive stocks like real estate, gold, even bonds, right? Or even consumer discretionary companies like, I don't know, maybe like Walmart or Costco. You know, they're moving towards these very defensive type of investments to weather the volatility that is going on in the market, right? Technology has been taking a beating, right? I just bought into this. I put $170,000 into this, and it's already down $25,000 since I think like early March or very late February. So that was unfortunate to happen, but it is what it is. This isn't the first time something like this has happened to me, and I'm going to show you what I mean. All right, BDCs, again, I don't really do too much about BDCs. I do plan to invest a little bit more money into these, or honestly, I'm kind of thinking of selling out of these. I don't really talk about them too much, but I have SLRC, I have Ares Capital Corporation, Blackstone Secured Lending, Golub Capital, Main Street, Gladstone Capital, Southwest Corporation, and Triple Point Venture Growth, which is honestly the worst performer of them all. But I mean, it only has like, you know, under $400 in there, or $375. So not exactly a large position. The biggest one I have in here is SLRC. I honestly want to trim these positions and just get rid of them, because I don't think I'm going to be investing as much into the BDCs, and I'll probably just put it either into BXSL or back into SLRC. I'm waiting for more of a better price point to make that happen. But yeah, you know, it is scary. And even in my Robinhood account, this is a brand new portfolio I just started in March. Okay, I've never invested in high income ETFs or high income products. So this was kind of an experiment, and it's kind of weird to say that, especially when you're using your own money, especially a lot of money, and then you're doubling with debt, right? Because this portfolio has close to $90,000 in margin. So the portfolio value in total is about $190,000. All right, I have a position in pltw from Roundhill and nvda. This is the Palantir position and nvda. I have a 0-day to expiration cover call ETF xdte, which does cover calls on the S&P 500. Same thing for xpay. And then an Ethereum cover call ETF. And all of these are from Roundhill. Don't ask me how that all happened. Honestly, if I was trying to get away from Roundhill and wanted to look at Kurv, but Kurv doesn't have an NVIDIA fund or a Palantir fund. But I would rather go with them if they had that, but they don't, unfortunately. So, I mean, you guys can see it right here. I'm in the red, like bad, right? My Ethereum cover call ETF is down 20%, basically 20%. Now that sucks. Now that really, really sucks, right? Because I just got into this thing and already it's down. But all of these positions that I picked, you know, especially the xdte and xpay, I mean, they're tied to the S&P 500, right? So unless the S&P 500 goes down tremendously, you know, I'm talking like 50, 60, 70%, I'm not too worried about xdte or xpay because I know it's tied to an index. Palantir, NVIDIA, and even the Ethereum cover call ETF, I'm a little more worried about these ones, but not worried in the sense that I want to sell them. More worried of, you know, there's going to be more pain and I'm just going to have to deal with it, right? So I want to share this article or this blog post that I wrote a very long time ago, back in 2020 when I first started actually investing and taking the stock market a little more serious. Right. So I used to have a blog. It was called Let's Make a Million. And I was basically just putting all my blog posts in there. Right. It was just blurbs about my journey through investing, real estate, self-development, travel, life, and personal finance. So when I came out with this was one of the earliest posts I had. Right. And this was right around when CV19 happened. And you guys can see this massive drop right here. You know, scrolling down a little bit more, you know, my count values, I wish I had the screenshot, but I actually lost a lot more money than this, right? I lost almost $12,000 in 1 week, right? Which was at the time a lot of money. And I saw these go down as far as, you know, 20 and 30%, right? We can see right here, this is referencing my whole VGT position. So you guys can see right here, I had moved a lot of money into this index, right, into these index funds. And then weeks later, it dropped substantially, a lot. And that was a horrible feeling in my gut to see that happen. I forget what the account values were, but it was a lot, right? It was a lot from my net worth. And to see it drop that bad had my heart sink into my chest. But, you know, the more I educated myself, the more I learned, the more I maintained my composure and didn't sell, it worked out in the end. We ended up recovering, right? The index ended up recovering and had a couple years worth of a bull market right after. You know, so I just want to share kind of some of the points I learned. And this is just more background information. I wish I had those screenshots, but yeah, this was all done off my phone at the time. But yes, here's some lessons that I learned along the way, right? One, you never sell at the bottom. So we are right now in a huge correction, right? Whatever you want to call it, a correction, a recession, a downtrend, a bear market, whatever you want to call it. Don't sell your holdings at the bottom. If you liked the companies you had, if you liked the picks you had, if you liked the ETFs you had, you know, for one reason or another, remind yourself of that. Now, if the thesis, if the idea for these companies changed, then yeah, you sell them, right? Like, you know, if you don't like Bitcoin anymore, you don't like cryptocurrency at all anymore, and you sell out of these cover call ETFs and you want to move the money into something safer like an S&P 500, I totally get that. You know, but I'm seeing investors throughout YouTube just changing their portfolios like drastically because they've never either been through a bear market or a market downturn, and this is their first time doing it. So now everybody's kind of flocking to safety. And I get, you know, it might be prudent to flock to safety, but when you do that and you sell at huge losses, you basically cement those losses. Those, you know, you're never going to get those gains back. And, I'm not talking specifically about index funds or cover call ETFs or, individual stocks or position, whatever. I'm just talking more broadly. All right. So just keep that in mind. This advice is not always going to be a cookie cutter thing for every single asset out there, but it is generally good advice in my opinion. And this is what I learned. This is what I've read. So I'm just sharing it with you guys. All right. The S&P 500 index has returned 10.3% over a 90-year period and roughly 8% since 1950. Stay in the game, never sell. That's a big one. All right. I always like to look at this chart right here whenever we have market downturns or whenever I get worried about what's happening in the macro. Over time, we've had more bull markets and bear markets. And this is through all the wars, recessions, depressions, conflicts, presidents, whether Democrat, Republican, crises, banking, financial failures, great recessions, great financial crises, real estate bubbles, dot-com bubbles, everything, oil crises, just everything. We have had bull markets every single time, and we've had more returns than we've had, declines. So again, you have to think long-term and think bigger picture, all right? Market corrections, recessions, depressions, whatever, and bursts are all normal, okay? Don't lose your shit when you're investing. I get it, it's scary, but you have to stay the course, all right? Stay disciplined, stay invested, keep investing, and never second guess yourself, all right? If you really liked an asset, maybe not so much a single stock because those can really change, on a dime. But if you really liked the stock or the ETF, you're going to like it at a cheaper price. All right. That's just the way it is. That's the truth. I'm not saying it's the truth for every single stock or every single ETF, but if you did your research, you liked the stock at a certain price, you bought in, and now it's below, it's cheaper. Well, there you go. This is your opportunity to dollar cost average, get cheaper shares at a cheaper price. Okay. When there's blood in the streets, buy, even if it's your own. All right. That's another one. New wealth is generated during market panics. All right. This is a big one. When I was investing and I saw that huge decline, I was putting as much money as I could into this ETF, right? Into these ETFs. I was putting as much money as I could. Every paycheck, boom, 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 just dropping money in there. Eventually we recovered. Just on the recovery alone was 30%. So if I bought anything at the bottom, I was going to see a 30% just on the recovery. Isn't that amazing? Isn't that crazy? And then anything after that would be pure profit, right? So just on the recovery was 30%. So I made 30% on every dollar I made, and then whatever came after that. And we saw the stock market continue to rise after that. So that 30% turned into, 40%, then 50%, then 60 and 70 and so on and so forth. All right. Ignore the pundits, the analysts, the gurus, the experts, right? Research historical data yourself. Learn about history and the stock market. Education is probably the best thing you could do during these volatile times because everyone is fearful of what's happening. But if you actually sit back and read through what has happened in the past, even though they won't be identical, they usually rhyme. And if you just look back in the past and see how other investors handled things, or how some of the biggest investors out there handled things, like Warren Buffett, if you just look at how they handled things, you will realize that they stayed the course. They didn't just sell everything at huge losses, and they just kept investing. Right? There's back in 2008, 2009, there's a running joke that a lot of people had 401ks that turned into 201ks because of a 50% drop. But there was also a lot of people that sold right there in 2008, 2009, when the stock market dropped, right? They lost half their account values and they sold at the bottom. Had they just kept it and held on to it, they would have experienced a bull run after the fact. But it is what it is, right? And then, of course, never bet against America. This is one that I learned. I don't even remember why I put this in there. And again, this was written back in 2020. And I don't remember what happened. But maybe it was our stock market recovered faster than all the other markets, like the Nikkei, China, India, or any other one, or even the European markets, I suppose. But America dominates when it comes to the stock market, when it comes to generating wealth, right? The market is the market. it's going to do what it's going to do. I can't explain it. I'm trying to think of the words to say. But any company that comes out of America, not any company, that's not true, but I would say the most innovative, largest companies that come out of America usually beat the odds, right? They usually beat the odds. Can they lag behind? Right now there's the Magnificent Seven, being dubbed the Lagnificent Seven because they're lagging so far behind, and their returns are not as juicy as they used to be. I'm still not going to bet against them, and they still make up a big portion of America's wealth, and they're still some of the most innovative companies out there. So I think they're going to be around for a very long time. And the picks that I have, especially in like Palantir and nvda, I really think they're going to be around for easily the next decade, if not more. So I'm not too worried about these. I'm thinking long term. I'm thinking 6 months, a year, 3 years, 5 years, 10 years out for some of my picks, right? XPay is probably the one that I'm the most iffiest about, but I'm holding it for now. I will wait and see if we get a good recovery, and then I'll make a decision about XPay. But xdte, XPay, again, these are still fairly new, and to constantly change the portfolio, especially during this volatile time, is probably not the best idea. But anyways, I just wanted to offer my thoughts to you guys, talk to you. And again, let's quickly just go over this stuff. You guys can check this out on YouTube. This stuff was crazy, right? Like you guys can see, and it happened in Myanmar as well as Thailand, but Myanmar got hit the worst. It was really, really sad seeing some of the footage. But this was actually in Thailand. This was a new skyscraper being built, a new condo, I believe, and it just toppled over. A lot of people got trapped in the rubble. Very unfortunate and very sad. So again, I'm very thankful that nothing bad happened to me, because it could have been much worse. There was also videos of just water like coming down from these high rises, because a lot of these high rise condos, what they have is infinity pools at the top, and you can see like the building is swaying back and forth left to right, and that's causing the pool water to flush over the balcony and hit head down below. When I woke up and everything was happening, because I was taking a nap when this whole earthquake was happening, I woke up and I thought there was like a tropical storm happening because of all this water hitting my window. And then I started hearing all these things dropping in the unit above me, and I'm like, what are they doing? Is this construction? And then the whole building started shaking violently, and I was like, holy crap, I don't know what's going on, but this is scary. It was a day for sure. It was a day, but luckily and thankfully, I didn't run into any harm or anything like that. Here's another video again of an infinity pool where it's just splashing over. The water's just going crazy. We just saw that video. Again, another angle of another condo. I saw a video where there were people in a pool similar to this, and they were on a raft. And luckily, as it started happening, they got off the raft and swam to the edge of the pool to get out. Imagine if they stayed on that raft and that water pushed them out over the balcony. Like that would be horrible. I follow a lot of other YouTubers and Instagrammers out here in Thailand. We're all kind of connected in this like community of sorts, and seeing some of their stories. I mean, they had lived in condos that got destroyed, absolutely destroyed in Bangkok. This is a video of I think the Park Origin. I was actually going to live in this building, and these two sky bridges are cracked, like they're destroyed. You cannot walk up there because they're basically cracked in half. And I don't know if I didn't see this video. This is the first time. Yeah, I doubt he has it. But yeah, like, look at that. Look at that damage. You're not going to walk across this thing. This thing, man, it's crazy. If you can find some footage about this, these buildings were swaying left and right. Like, that's how bad it was. They, easily 3 feet to the right and 3 feet to the left. Imagine if it was another foot, like another foot and a half, the building could have probably cracked, or something would have happened. Something would have gave. Luckily and thankfully, nothing happened. All these buildings are built, to rigid specifications by, by the people constructing these buildings. So thankfully, no condos actually did collapse. No finished condos actually collapsed, because that would have been catastrophic. Thankfully, again, I'm okay. And again, a huge heartfelt appreciation to everybody who reached out to me, either on YouTube or through Instagram or Discord, just to ask if I was okay. It really does mean a lot, and I can't speak highly enough about it. All right. But other than that, guys, I'm going to end this video. I just wanted to give a quick portfolio update and kind of, spread some love and, kindness. And again, thank you guys for checking in on me. You guys have a great rest of your weekend, a great rest of your day, wherever you are in the world. I will see you in the next video.